Talking about excitement, I am now going to introduce our panel. And we are going to talk about the power of collective investing. And can I welcome Benjamin Storey from Barclays Demo Directory, Emily Fitchett from Republic, and Piero Greco who's a member of Southeast Angels. Welcome. I would normally say, why don't I introduce you? Because from experience, people are always way too modest, I find. And they never tell us everything they really should tell us. But I think people are probably fed up listening to me. So why don't you go ahead and introduce yourself? Benjamin, do you want to start first?
Yeah, of course. So my name is Benjamin Storey. I'm head of investor connectivity platforms and propositions at Barclays Business Bank, and also head of something called Barclays Demo Directory, which I'm sure you might have seen a logo or two about earlier today.
Hi, I'm Piero Greco. I'm a member of Southeast Angels for coming up to 3 years now, which has been a really interesting journey. Before that, I worked on a trading desk and investment bank, which is actually quite atypical for our group. So it's quite nice to have a different set of people to invest alongside.
Emily.
Hey, I'm Emily Fitchett. I'm the Global Director of Partnerships at Republic. A lot of you might know us as Cedars previously, but we were acquired by Republic about 3 years ago now, who are a US private equity investment platform, making us the largest global private equity investment platform. We've actually deployed about 3 billion in capital now into thousands of startups globally. So yeah, really excited to kind of join the panel today.
Fantastic. So we really have got a collective of collective investors here. So I'm excited to hear from you all. Piero, can I start with you? So you're a private investor and you've been investing via Southeast Angels for a number of years now. Just tell us a little bit about your personal journey into angel investing and also what brought you to Southeast Angels and the syndicate in particular.
Yes, so having worked at a bank where I was extremely restricted in what I could invest, I was kind of, when my career came to an end there, I was kind of like let loose and promptly went to probably the most risky asset class possible, which I always had a hankering to be a bit of an entrepreneur, but as someone else mentioned earlier, I hadn't actually had any good ideas, so...
It's a common thing.
Yeah, it is. I still haven't had any. But thought actually if I can back people with really interesting ideas and broaden my investment portfolio, which was pretty much shares in my previous investment bank and a bunch of cash and ETFs, then it was a really good opportunity. And I luckily had the time at that point to really jump into it. So it was a great opportunity to learn from scratch how to try and angel invest. And I think now I know how little I knew then, but it's been a really interesting journey. So I mean, I read Richard Hargreaves' book, which I know a number of my fellow angels have done as a starting point. And then probably for my first investment, ignored pretty much my entire investment plan and all the advice in the book and just picked something where I liked the product and liked a couple of the people and did similar for the second one, at which point I think I took a little bit of stock and realized that actually trying to do this on my own was probably not the best idea and joined an online syndicate at that point. It was at the back end of COVID. And, you know, that was a transformational experience in that suddenly you were getting all these different voices, different perspectives, different bits of experience, which kind of opened up a lot of possibilities for me. I think the journey then to Southeast Angels, really I learned from that experience, which was quite online. There wasn't a collective responsibility and a kind of social cohesion that I was looking for, in that you might have 6 or 7 people interested in the company. I joined the due diligence call and it would be me on there for 2 hours, and that got a bit annoying after 2 or 3 lots of that. So, you know, the beauty of Southeast Angels, which was, it had been on my horizon, but I was a little intimidated by the kind of small group in person, but that was a great opportunity to meet people in person, get to know fellow angels and learn a bit more in person, and that collective responsibility and knowledge was great.
And how did you come across it? Were you introduced into
I wasn't. I'd been researching different networks, and then I'd kind of seen what was Christine was running locally, and I think it was the point in time where I just thought actually that size of group, the in-person nature, kind of really appealed to me. But it wasn't at the start. I think that would have been a bit intimidating because I still, even preparing for this and looking at my portfolio, thinking, I still have no real idea what I'm doing. I feel like a fraud. and I'm pretty sure I'm not the only one who feels like that. And so actually, it took a while on that journey to get to find that right group at the right time. And now, obviously, I think what's easier for people to come into this is that you probably work out that most of the people in the room are kind of relatively normal. They all know that they don't know a huge amount about lots of different areas. And that I think is quite intellectually freeing, because you're in a lot of people in a lot of work environments where there are experts, people think they know everything. I think we all know, because of the businesses we see, that we really don't know a lot, and you enjoy that experience.
Goes back to Stephen's comment of humbling, humility, right?
Yes, yeah. You have to enjoy that.
Thank you for calling us relatively normal, though. Emily, if I can just move to you. So, as you mentioned, Republic is one of Europe's top crowdfunding platforms, and was it 2.5 billion that you mentioned?
Over 3 billion globally, yeah.
Over 3 billion globally. Tell us a little bit about the role Republic plays in early stage funding.
Yeah, I mean, I think crowdfunding is really synonymous with community. That's what we're all about. It's about how do we democratize access to investment. It's about how do we lower minimum investment amounts. How do we, pool together capital for founders that might not be able to access venture capital or access other formats of funding. And there's a whole heap of other benefits to using this type of capital raising. I think one of the biggest things that's really, really important about community is that you're doing it as a collective. It's about empowering the founder. It's about empowering the investors. You've got a vested interest in the success of that company. How do we come together as a community to enable that and to work together to make it a success? And that's what Republic is all about.
It's really interesting, because certainly in my role at the bank, I spend a lot of times in different types of rooms at different stages of the funding ladders, and the one thing I would say is community comes up time and time and time again in that pre-seed, seed, early stage environment. It's the investors are there for the community, the founders are there for the community. Yeah. It becomes less so as you go further on, unfortunately so.
Well, I actually disagree with that. I think that community throughout the life cycle of a company is so important. You take influencer brands, for example, they're built on communities, and you just look at what's her name, Hailey Bieber has just sold Rhodes for $1 billion. That's based off a community of people that she's generated. I don't think there's anything more powerful out there than a community. And we were talking in the last session around what is your moat, what is your defense, and we were saying data is your defense. I actually also think community is a defense. If you have a community bought in with a vested interest in the success of something, you're all working together as a community to drive that success.
Yeah, that's a great point. And perhaps leads into my question for you, Benjamin, around Barclays Demo Directory. So this came off the back of Eagle Labs, if I understand correctly. What led Barclays to start the Demo Directory? And can you tell us a little bit about how it works?
Yeah, of course. So for those unaware of Eagle Labs has been a part of Barclays for the last 10 years, which is all about empowering and helping local communities to help grow early stage startups to ultimately drive the economy forward. Demo Directory was born out of, again, ultimately understanding some of the key pain points that founders are saying. Actually, when they're trying to raise capital, they're really looking for investors who are the right investors for them. They can go and do a lot of meetings. They can go and have a lot of first-time meetings, but the people they really want to meet, the people who are going to write the checks. And I appreciate it's not as simple as that, right? So born out of the concern and the challenge of actually going and raising, what founders will generally do is they'll scattergun. So they'll find those 5 or 10 investors they think that are going to invest, but then they'll send off that same deck to another 20, 30, 50. And it's time-consuming. It's really low success rates. And it just makes the whole market really inefficient. So this is where Barclays Demo Directory comes in. It tries to simplify and make the market a little bit more efficient. So Barclays Demo Directory is an entirely free platform, which is free for founders, free for investors, and ultimately it allows the founder to create a listing, and that gives empowerment to investors who are looking for deal flow. So if you're only looking for something, I don't know, a fintech raising 100K or with a female founder based in Brighton, you can literally use the 15 filters and search functionality, so you can just find the things as an investor that you're interested in. If you like what you see, you read their profile, you get in touch, you have control as the investor. If you don't like what you see, you move on, and no one ever knows you've even checked their profile out. So wrongly, I always call it like the Bumble for investors, but I always get told off for that, so I probably shouldn't have mentioned it.
Quite like.
So I think, yes, so we've been live about 18, 19 months. We've had 1,800 founders, I think, something like that on the platform. We've got 600 VCs and angels and angel groups using the platform. We only allow professional investors. We don't allow the public onto it. And yeah, I think if you look logged in now, you have like 290 live deals, people who are raising currently. And in terms of successes, we always get asked. So I think 9.6% of the companies were live in 2024 went on to raise capital. So I'm failing 91% is what I hear from my colleagues, but actually 9.6% is really, really strong, I think, compared to the market average. So.
Wow. And I'm interested just broadly across the panel, when we talk about collective investing and the origins of collective investing, it was about democratizing the whole space for investors and for founders. To what degree do you think we have been successful in achieving that? So can collectives readily access deals that would have previously only been available to VCs? Perhaps, Benjamin, can I start with you?
I think the power of I think there's lots of things on there I could really touch on, but the key one for me is being in a syndicate or being in a group of like-minded individuals who are looking to invest. I think it opens up opportunities where you're bringing a mix of skills, a mix of experiences, a mix of connections. I forget the panel. I think it might have been the last panel, but no, it was Nick Button-Brown who said about actually the connections that you bring into the opportunity. I think it just means that you're now more of a value to the founder, which brings in actually, if you can meet the same quantum of capital, which is, and you sometimes see VCs coming further down in the chain, if you can meet that same quantum of capital, you're now actually probably more attractive proposition as an investor because you're bringing so much more wealth, experience, connections to help that founder. I think Nick touched on it perfectly earlier.
Emily, would you add anything to that?
Yeah, I mean, I think nowadays access to things that you typically couldn't get access to is becoming so much easier. Platforms like Republic, where we offer access not only to early stage startups, but to funds as well. I mean, we've worked with British Business Bank in the past. We work with SEIS and EIS funds, where we were able to lower the minimums to access that fund and become an LP in that fund. So there's now open opportunities where you can get access to things that you probably might not have been able to see in previously, and that's through platforms like ours. It's through syndicates, it's through angel groups, and the strength that comes in numbers, which is great to see, I think.
And Piero, from an investor point of view, what's your sense? Do you feel you're getting in on the action that you want to get in on?
I think there are certain types of companies and founder groups that we're not going to see because they're immediately going in and raising the sorts of sums that we're not that useful for. But actually increasingly at the moment, the last probably year or so, because it's been a very, very tough funding environment, as has just been mentioned, that the bar for VCs to get involved is often revenue, certain amounts of revenue. Actually, I think angel syndicates are playing an increasingly important role in bridging to that next level of funding. So we probably see businesses that you wouldn't necessarily expect to see at the angel level, and we're having more influence on how those companies progress and potentially helping them maybe avoid some of those further funding rounds where they're signing the sort of terms that they would rather not. So actually, I think actually we're getting that increased access.
And Emily, I'm interested, your experience, you have experience not just with platforms and crowdfunding, but from your own business, your own startup, yes, which was Fitch Brew.
It was, yes.
Where you did crowdfunding yourself, you got debt, you got equity, you've got the whole works, really. if I'm a private investor now and I'm thinking about investing through some form of collective, whether it's a syndicate, whether it's a platform, whatever, how do I decide? Is there now so much choice that we've actually made it even harder to make the decision? How do I decide and how do I qualify it?
I always, I really like the analogy of when you're going to a restaurant, and if you walk past a restaurant and it's full, and then you go to another restaurant and it's like 40% full, you're going to go back to the one that's really full. And it's exactly the same, I think, with like collective investing. The deals that I think are really strong are the ones that draw a lot of attention, and they get that FOMO. There's a power, I think, in the with a group of people, with the DD that comes with that, with the collective understanding of that business. So I think there's a real, when you're looking at investing, deciding, probably look at the traction of the investment amount going into that company. On platforms like Republic, you can obviously see when something goes into overfunding and they're going to go past that, you're getting that momentum. Platforms like eToro for public investing, doing things like the copy trading, of the success there. So I think there's a lot of ways where you can like cheat code a bit, and if you're unsure about what to invest in, that following other investors is really powerful.
And I guess, Benjamin, with Barclays, there's a bit of a barrier there in terms of that you said there's no retail in there. There's a natural barrier. But who decides to go to Barclays, for example?
In terms of founders, in terms of investors?
In terms of the demo platform.
From a founder's perspective. So linked to the Eagle Labs, I think Eagle Labs for the last year has been serving around 10,000 founders, or just under 10,000 founders a year coming through our programs, our platforms, our propositions. So 21 live programs, I think, last year. So we have, and then we also have 42 physical sites in and around the UK, from Aberdeen to Bournemouth, Belfast, and Norwich. So we're becoming a little bit of maybe a known community up and down the country. So it's been a big attraction pull. I think one of the attractive things for Barclays Demo Directory is you're coming into Barclays, which has a wealth of investment bank clients and wealth of private bank clients that are, we're working through trying to get as many of those that are eligible onto the platform, so that you start buying into a big network of people who hopefully you can trust, and maybe investors looking for deal flow. And then we're just leveraging, as I said, on the investor side, leveraging all of our private bank connections. So in terms of who's coming to it, I think you're coming into an established ecosystem by an established brand. You've got a little bit of credibility almost there. So we're still but the infancy of growing this. Say 1,800 founders is very small for where we want to be, but I say we've got the attraction strategy from the Eagle Lab side as the main way, I suppose. And then you've got a business bank and the Invest in Women's Task Force, which is currently being headed up by Hannah Bernard, obviously CEO of Barclays Business Banking as well. So again, more things that are helping ultimately drive more founders to the platform.
Yeah, so it's interesting hearing about the choices from an investor point of view. I think for a long time, something that we've grappled with more on the demand side, so founders who are looking for finance from a bank point of view, they would say to us, we just don't know where to go. We know there's lots of options, but we don't know where to get started. So that demand problem has been a challenge for us, and it's interesting that there's a certain degree of it on the investor side as well that perhaps hasn't been there in the past. Piero, if I could just move to you as an active angel investor, and I think you've touched on this already, but if we could just pause on it for a moment. What do you see as the real benefits of investing as a collective? And in particular, what effect does it have for you in terms of your decision making and what you do and you don't invest in when you're in a collective?
Yeah, and I was I've been talking about this with a couple of the fellow angels today, but coming from my particular background, I have very little knowledge of many of these sectors, like medical technology. It's completely outside my comfort zone. But one of the things it's enabled me to do is make some impact investments, which I was very interested in, for example, in green technology, medical technologies. And without those fellow angels, the knowledge they bring, the experience they've had in those sectors, I just wouldn't be able to comfortably make those investments. So for me, it bridges the gap between some of the impact you'd like to have and that lack of knowledge and experience to be able to evaluate on your own. So from that point of view, it's been kind of critical to have that kind of group environment to make the decision. I think the other thing is, just being in a group, speaking to founders and businesses in a group, lots of times it will be the odd person that spots a problem or has had direct experience in that sector, and they're able to just transform a conversation around investment in a way that you would not have had access to if you were trying to do that on your own. So for me, it takes out all of that risk on the one side, and that one feature or one characteristic of a founder or a company that is a massive red flag. If you don't have the knowledge and experience, you might not spot it. So it's very important from that point of view. I think also just the collective experience of learning and kind of helping companies, again, has made it very enjoyable. I think the other thing you get with Southeast Angels is that you are filtering out a lot of the noise which you might otherwise kind of see. So there are a lot of companies out there which are just not investment ready. So trying to do that on your own, the amount of time investment that takes is just, for most people, not practical. So I think it makes access to really interesting companies that you'd like to invest in kind of possible without making too many stupid errors, although it doesn't entirely protect you from that.
And what's your thought on one of the points that was made earlier about the proximity, that how close that you can actually get to the company if you're not on the cap table yourself? What's your thoughts on that? Do you feel connected enough with the companies you're investing into? Yeah,
I mean, it's very variable. I mean, actually, I'm kind of working for a couple of the companies I'm invested in, so that those two, I feel, I've kind of flipped over to the other side and been helping them fundraise and run their businesses. So that's taken me to some pretty interesting places. I've been to an egg processing plant, which I never thought was in my future. Yeah, I've been to various trade fairs in the building industry, so I'm completely outside of my comfort zone. But it's a great excuse to learn, and for me, that was pretty important. I now listen to like 2 AI podcasts every week, and I'm learning about crypto at the moment. So it's a great way to expand your general knowledge. So if you're time poor and you just want to make some investments, it's probably not the way for you to attack it. But if you're interested in learning about founders, being at that cutting edge, that Christina mentioned before, and learning new things, it's a huge opportunity. So
So you make yourself closer.
You have to. I mean, I think we are. The nice thing about our smaller group is that we're constantly thinking about ways of how do we make ourselves more useful. But as other people have said before, actually, if you just try and help people and help founders where you see an opportunity to, it's just good for everyone. It's good for you, good for them. It makes it an enjoyable part of that process. So those investor introductions, possible clients, all that kind of thing. It's an easy way to help that is kind of rewarding, and you can take it to the extent where you like me, you join as director and you're on the board of the company. But yeah, there's lots of space in between.
Love that egg factory. I'm not going to ask you what you were doing there. Counting them. I've got one final question for each of you. What one thing needs to happen to really shift the dial on collective investing in the UK that means we'll be looking at something very different in the next 5 years? Can I start with you, Emily?
Yeah, coming from Republic in the US, we're quite large on crypto and Web3. And I think one big thing that's happening over there, which I think needs to happen over here, is legislation change for things like being able to do tokenization and crypto and move into that space. I think that will enable collective investing on a different scale. We've just opened up a round with Hamilton Lane in the US, a tokenized round to enter their fund. So it's giving access that you wouldn't be able to get otherwise by doing these types of funding rounds. And it's happening in the States in a really big way. We're really slow in this country with a lot of legislation. And it's really frustrating from a founder point of view. It's really frustrating from an investor point of view. So I think the two sides of government and startup ecosystem need to work more synonymously together. I know there's a lot of stuff going on already, but it's slow. It's very slow. So speed, agility, adaptiveness, that all needs to change.
Yeah. Point taken. Piero?
Yeah, very good question. I think for me, in the space that angels are in that kind of pre-seed space, right now, if you want to encourage people to invest more, we need to reduce that risk. So I think that the tax incentives are there. I think part of the problem is that there's just not enough money going into that space. There's not, there is a big gap in bridging that funding round. I've got several companies in my portfolio that are doing really, really well, but are probably just going to run out of money, and they can't raise enough money. And if you compare those same businesses to if they were raising in the States and they're just getting $1, $2, $3, $4 million checks, it's transformational for businesses. And a lot of the companies we're looking at are just scratching around, preserving every penny they've got, and that makes it more risky. So if you want to encourage collective investment, like we're taking out some element of funding risk from that profile, I think would encourage more investment.
Benjamin?
I think, obviously, because we look at something like the SEIS or EIS regulations, but I think seeing as you both touch on regulations, I'm going to go on a different path just to make it a bit different. So I just think democratising access broader, I think UKBA does some excellent research every other year on where people write their investments. If you look at the angel size checks in particular, most people, like 75%, I think, invest in their local regions. I'd love to find ways of, because I just think your perfect investor or the right investors aren't always, or people who get the business aren't always in your postcode region or in your local region. So just ways in which we can democratise access and get ultimately the right investors from wherever they are in the UK or not in the UK to be fueling these companies. I think I agree with the regulation side, though. I think we could have had a whole panel on regulations.
So less legislation, more money, and more democratisation. Solve that all today.
Easy, right?
I think we're out of time. I just about made up my overrun. Emily, Piero, Benjamin, thank you ever so much. It's been really fantastic talking to you all, as it has been listening to all the discussions today. I think we are at a break, if I'm right. Thank you.